I'm going to reshare on my personal, make sure it's actually live. The other day we went live and it didn't actually. So now I double check every time. All right, we are live. Cool. Alrighty, everybody. What's going on? Welcome back to Wolf. It's good to see all of you here. Me and Robert coming at you again, talking about everything going on in the markets. We have Bitcoin doing a little bit of trending down. Nothing crazy. It just is a cliff, quite literally. That was pain, dude. I was not really expecting that. Man, that was pretty wild to watch though last night, or I think it was last night. I don't even. The days are all blending together, but yeah, Bitcoin sitting just above just in between $86,000 and $87,000. I guess a bit of recovery here. I'm hesitant and scared to zoom out. I don't even want to. This is as close. This is as far out as I'm going to zoom on my account. I'm sure we'll get into all the things on here. But we also had Japan. So yeah, we're going to talk about Japan. We have QT. QT was supposed to end today. It is December 1st. So that was a big reminder. We saw Michael Saylor tweeted out earlier today, or maybe it was yesterday. I know it was yesterday. The typical orange dot picture, and he said green dots are coming. Everybody was speculating. I think British Hodl put out, or someone like that put out, and he was like, maybe he's going to buy Bitcoin treasury companies. And it ended up just being that he's building up a USD cash reserves to pay off the derivatives or the
preferreds,
dividends, and all that stuff. Was he basically needed some cash reserves, and so I thought that was a pretty interesting story. So anyways, yeah, I'm excited to get into the conversation. If you guys haven't already, please do repost the stream. And if you guys want to start trading, if you are interested in these discussions and you like the numbers and the charts that people bring up, I know some people are not chart people, but for the people who do find these things interesting, definitely check out Ostium. They're our great partners here at Wolf, and you can trade any and all assets here. They've got crypto, they've got indices, they've got forex, they've got stocks. You can even trade commodities. It's actually a pretty cool platform here. And the link is down below, right below the stream. I highly recommend you guys check it out, actually. It's a very cool platform. And yeah, man, they're longtime partners of Wolf. And I'm excited to sort of jump into the more complicated chart that we've got on Mr. Robert's screen. A bunch of things pulled up here. And Robert, it's great to have you. I hope you had a great Thanksgiving week as well. And I'm very interested to see kind of what you're paying attention to. It is kind of chaotic on the timeline, I will say. It's like kind of super chaotic. And every single week, I feel like it's like the most chaotic, and then like a news story comes in, and here we go again. So, anyways, I'd love to get sort of your, where you're at with everything.
Yeah, I went to Big Sur, so that was nice. I would highly recommend, if you're going to California, go to Big Sur. It's like the best place in the world. Yeah, markets were already it was probably not the best time to take off. I feel like I'm still not caught up completely over I only took off really like 2 days, but feels like a lot has gone on over the weekend too, as well, with Kevin Hassett emerging as like the front runner, I guess, for the next Fed chair. You also have issues with Japan. You have issues in the repo market here. Yeah, you mentioned Bitcoin, and so I pulled up the Nikkei, which is the Japanese version of the S&P 500. And yeah, you can see that Bitcoin slide started pretty much tick for tick with the slide in the Nikkei, which is Japan's major stock index. So yeah, Japan, what's going on over there? There's increased bets of rate hikes. Japan historically has had very low interest rates. I should probably draw a line here at 0, so we can see Japan, even their 10-year, they have, of course, had yield curve control. Their 10-year was basically at 0. Their overnight interest rate, their short-term interest rates were below 0. So they had negative real rates. And yeah, we are coming out of that regime. We've been coming out of that regime going back really to kind of mid 2022. That's when yields started to rise in Japan, and they started to rise for a good reason, which was inflation started to pick up. Here we can see inflation. Their inflation rate is currently 3%, but yeah, it started to pick up back here in 2022. And so long end rates started to move higher. Wage growth also started to kind of pick up and trend higher. They had negative wage growth. So I know it's bad in America with, 1%, 2% raise when inflation is, 8% or whatever, but at least, we don't have negative wage growth. That's what they had for decades. In kind of the last decades, Abenomics was very loose fiscal monetary policy to try to stimulate the economy. It ended up working. Again, in 2022, they finally started to get inflation. We can see that in the teal line here. They finally started to get inflation. They finally started to get wage growth. And so that is why rates started to move higher at first. It was actually not, like we've been conditioned here in America to believe that higher rates equal bad,
Mm,
kind of automatically, because we had ZERP and, QE and a bunch of nonsense for the past, I don't know, 20 years almost.
yeah.
But rates can move higher for good reason, for good fundamental reason, and that's what was happening in Japan. And what we see now over the past month, maybe or so, maybe 2 months, is a different reason that rates are moving higher, which is they elected a populist prime minister. Populism is not good for bond markets. Same goes for
Mm,
the U.S. bond market. We just have a little bit kind of added buffer to these sort of shocks. In that we are the reserve currency issuer, but that populist prime minister was elected around here, and we can see what happened. What the long end of their yield curve did. It started to go vertical, and so yeah, that has been a different driver over the past month or two than what the driver was initially, which was kind of positive fundamentals. You eventually get higher rates. Eventually, there's an equilibrium point where all the capital that Japanese firms, individuals, to some degree, even their sovereign, even their central bank on the sovereign side,
mm,
they have for so long put their money. They run a very large current account surplus. They've put their surplus earnings into U.S. Treasuries, into tech stocks, those sorts of things. Well, there is a point, an equilibrium point, where eventually that capital starts to go back home. And so that is a repatriation risk that I think is building with higher rates. What we see over the past couple days is the short end of their yield curve, like the 1 year, 2 year, that has started to move higher on rate hike expectations. So currently, their overnight interest rate is only half of 1%. So going back to inflation, inflation is 3, and their interest rate, their overnight interest rate, the Bank of Japan interest rate, is only 0.5. So really, the only point on the yield curve where you get a positive inflation adjusted yield is at the long end, the 30-year, the 40-year, something like that. So, yeah, rate hike expectations are starting to build. That's why the Nikkei sold off what we were looking at before. That's why that happened. The 2 year is had a coincident rise in the yield during that period of time. And so, yeah, rate hikes not good for their stock market. Their stock market didn't like it, and their bond market started to sell off. On those increased bets of a rate hike. A rate hike would strengthen the yen, and sure enough, that's kind of what we've seen is the
mm,
yen start to strengthen. I have that here in pink. It's a bit tough to see, but we did get some strength over going back to Friday. From Friday, looks like kind of the low. Thursday, maybe Thursday evening. We have started to get a kind of a bounce in the yen. We're looking at yen dollar. The more common way to think about the yen is dollar yen, but I think it's more
mhm.
intuitive to look at it this way when you're examining a particular country. Put it as the numerator. I think it makes more intuitive sense. So yeah, we've started to get a bit of yen strength off that increased rate hike bet. And yen strength could cause, an unwind of another kind of dynamic, which is that yen carry trade everyone talks about. That is where you borrow in yen, which historically was a good bet. As you can see, the pink line is
Yeah.
going down and to the right. So you borrow in a depreciating currency. Even if you did nothing, you're borrowing at zero, right? We established interest rates were basically zero. You borrow at zero, so the money's free, and you just buy the dollar. If you had just borrowed in yen, bought the dollar, did nothing else, you would have made whatever percentage return that is that the yen has declined. But to turbocharge that bet, what they would do, and this was trillions of dollars of capital doing this yen carry trade, is they would borrow in yen, sell the yen to buy the dollar. which of course puts more pressure on this pink line. But then they would go with the dollars. They would go buy U.S. Treasuries. They would go buy tech stocks. They would buy that sort of thing. So what you're doing is not only are you profiting on the yen depreciating, but you're also profiting on the NASDAQ going up or the S&P 500 going up or US Treasuries yielding, I don't know, 3%, 4%. So that was kind of a way to turbocharge the yen carry trade. What you were already getting positive carry, which was the yen was depreciating and getting cheaper over time, you are getting even more return. So you have the repatriation risk where all this capital has been Japan has been put into US treasuries, US stocks, US real estate. And there is a point at which, some of that money might want to go home now that you can finally get an interest rate that's somewhat attractive. I mean, their 10 years only at 1.8. So we're not talking like crazy yield yet. But there is eventually a point. I don't know where that point is. I don't think really anyone knows where that point is. But there is a point at which that capital starts to go back home. That would involve selling the U.S. Treasury, putting downward pressure on the bond, upward pressure on the yield. Then they would sell the dollar to buy the yen. That would put downward pressure on the dollar, upward pressure on the yen. And then, of course, they'd buy the JGB, which would eventually stabilize the yield, bring the yield down, bond price up. So that is the repatriation risk. The yen carry trade risk is that you have a strengthening of the yen. Well, all those people that borrowed in the yen thinking it was going to depreciate, they're starting to get squeezed on the funding leg of that trade. So yeah, you get a forced unwind of whatever they were long, right? They borrowed in yen, sold the yen to buy the dollar to buy tech stocks. Well, if the yen starts to rip against them and they're margin called because it's a levered trade, they're forced to sell the tech stocks, Bitcoin, whatever they had put those dollars into.
Are these automated trades, Robert, or are these like people panicking and like crap? We need like how does it work? Like when we say these things,
Well, I've never worked at a hedge fund. I'm just a nerd. I always say that. I'm no one special. I just I
observing the
just find
data.
all this stuff super interesting and nerd out on it. So I've never actually worked at a hedge fund, but I have talked to people that have. It's to some degree automated. You have you have a risk model, right? That the firm would use and implement across all of its various trades and kind of the book. When that risk model starts to flash, a lot of the unwind can be automated. And if you're facing a margin call, individuals can face margin calls as well. I've personally never traded on margin, partially for that reason, except when I was doing futures. But yeah, you can also face, a margin call where Robinhood, Webull, TD Ameritrade, whoever it is, tells you, look, like you got to come up with, $10,000-$20,000 or else we are closing your trade. So yeah, so to some degree it can be automated. There are a lot of like automated risk models. When you hear VAR shock, VAR, value at risk, that's kind of what they're referring to, which is it's a common model, risk model that's used where you're looking at how much risk is the book exposed to, and then degrossing, deleveraging from risk. And so, yeah, some of it could be automated, some of it could be panic. I mean, you can see panic in candles. Just like someone was making the point, you see a lot of panic to the downside. You can see that the Bitcoin chart you showed earlier, that's, you can see fear, but you can also see it to the upside too. So fear of missing, a rally, for example.
Yeah, no, 100%. One of the things, actually, no, we can stick at Japan. The thing I was going to bring up is like kind of a left field, different directional thing. But was there anything else on Japan you think that's worth bringing up, or things to kind of watch out for as well?
Yeah, not Japan. So repatriation risk with Japan, and then also the yen carry trade unwind, a level that I think would probably be one to watch on dollar yen. So it's going to be different than what we were looking at. So if you go back to when this is just I don't have any reason to believe this. It's just kind of intuitive. But here's the move that we saw when the populist prime minister was elected, this gap up here. I would imagine that a lot of people might have put that trade on during that, as soon as the market opened and the dollar yen was trading. So I would imagine kind of around this 149, 150 level. That's probably an important level for the carry trade. Also, the other thing with the carry trade is what we got back here that caused all the issues in the US was a pretty like unexpected and sharp. I think the velocity of the move matters as well, right? The degree, if you get a gradual yen strengthening over, I don't know, a year, right? That's a lot different than this,
Yeah,
which is,
absolutely.
pretty strong dollar weakness, yen strength. So, yeah, I would watch that level on dollar yen. It just kind of makes intuitive sense that people would have probably put on the yen carry trade there, or added to the yen carry trade there, because you're thinking, well, populist prime minister, very dovish monetary policy, very dovish fiscal policy. And so, you're expecting the yen to weaken or the dollar to strengthen in this case. And so I would watch that level for the carry trade. For the repatriation, it's kind of like, I don't think anyone really knows what level that might occur at. The other thing I would point to is SOFR, and kind of building liquidity strain in the repo market. So this has been developing over the past couple days. Here's a chart from Excel that I made going back, I think, about a month and a half or so. And it shows the 75th percentile SOFR minus the upper bound. So the Fed, of course, has an upper limit to where they have a range that they use to try to control SOFR, to try to control Fed funds. Those are the interest rates that money actually gets borrowed at in the plumbing of the financial system. SOFR is secured overnight lending, and then Fed funds is unsecured interbank lending overnight. And so they actually don't set one interest rate. A lot of people think the Fed sets one interest rate. They actually set a range. So here we're looking at that range. Up here, it's pretty tame and looks pretty orderly. You have at the lower end, you have the reverse repo award rate. That is the Fed saying, no matter how overabundant dollars get, we will always buy them at
Yep.
3.75. And discount window and standing repo, that is the Fed trying to set a ceiling in the overnight interest rate, which is saying no matter how scarce dollars get, we will always sell them to you at 4%. And so that range, once you start to get SOFR or Fed funds outside of that range, arguably the Fed is losing control over the most important price of all. And so what we were looking at before here, this chart, is SOFR minus the reverse repo award rate. The difference between what is SOFR actually, because SOFR reflects what the actual funding cost is. What is SOFR relative? What is the gap? What is the difference between SOFR and that lower bound? That is what the red line is showing here, and the yellow line being a moving average. We have issues not only with the secured overnight lending market, but as you can see from the white line, Fed funds has also been ticking higher relative to the reverse repo award rate, relative to that lower bound. And if we go back here, you can see that Fed funds, or the effective federal funds rate, was right in the middle of IORB and reverse repo. If you look now, it's been ticking higher for the past 2 months or so, going back to September, really. You can see it's been ticking higher. Now it's basically at IORB, which is interest on reserve balance. That is a special privilege, I guess, you get with the Fed. If you're a big bank, you get to park your cash at the Fed and earn a risk-free, right now it's 3.9. So yeah, Fed funds has been ticking higher, indicating liquidity is tightening in the unsecured overnight lending market. You also have SOFR, soaring well above the upper bound here, which is currently 4%.
Well, why do you think? Because we've seen, I mean, some people come to mind specifically, but like some people say none of this matters, and I'm like, well, what does matter then? I guess how much does this matter? And then for the people who say it doesn't, and this is like not something to worry about kind of thing, well, what do you have to say? I guess
I would say the Fed seems to think it matters. You've had Jerome Powell.
Mm,
You've had the former SOMA manager, System Open Market Account. That is the easiest way to think of SOMA, is who manages that balance sheet, right? Everyone knows about the Fed balance sheet, 6.5 trillion or so. Who actually like manages that? Well, it's a SOMA manager, and the former SOMA manager and the current SOMA manager and the Fed chair and the governor responsible for financial stability at the Fed, all of them seem quite worried. And the New York Fed president as well. So you have like with the New York Fed being the operational arm of the Fed, right? When we talk about like asset purchases by the Fed, it's not the Federal Reserve Bank of Cleveland, right? That is making those purchases, actually making the purchase, right? It's the New York Fed. The New York Fed is the arguably probably the most important branch of the Fed, which is the operational arm of the Fed. That's a New York Fed, and they held a unscheduled, hastily arranged meeting. And so, yeah, Jerome Powell, former SOMA manager, current SOMA manager. You have the New York Fed. Like they all seem pretty worried about this, about the repo market, about building kind of liquidity strain, and the trickle effect that it could have. For example, with the basis trade, which is a you know basically half of all U.S. Treasury issuance over the past 3 years has been bought by hedge funds in the basis trade. Half, like almost half, 40, I think it's like 42, 43% of all debt that the US Treasury has issued in the past 3 years. About half of it has been bought by highly levered hedge funds. By the way, when we talk about the basis trade, this is not a 5-to-1 or 10-to-1 or even 20-to-1 sort of trade. This is a 50-to-1, 100-to-1 leverage trade. And so, this is why they keep flagging it. We've seen the basis trade unwind. March of 2020 was one period of time where it unwound. This past April, all the kind of Liberation Day chaos. Remember what bond yields were doing? They were going vertical. I think the 10-year yield was up like 60 basis points in 3 days. So that sort of action is kind of what you get when the basis trade unwinds, because you're short the US Treasury futures contract and you're long the US Treasury. So that when that unwinds, it goes in the opposite direction, which is you're forced to sell, you're a forced
mm,
seller of the US Treasury, and you're a forced buyer of the futures contract. So you get a bit of a dislocation between the futures contract and the cash treasury price. And that is what the basis trade unwinding looks like, is you get yields going vertical. And obviously, no one wants that.
sure.
We run a $2 trillion deficit. So it puts serious pressure on the US government.
Yeah, there's a quote from Kingdom of Heaven, and I don't know if you've seen that movie. It's like 2005, and the guy, it's like it's a part of a bigger scene, but one of the first lines he says is, "The whole world is at chess." And I remember like that line stuck out to me. I was like, man, like they really are. Like we're a big player, but the entire world is like moving their pieces. Like Japan's in an entirely different mindset. Like their whole thing is like, I mean, they have to worry about our economy as well because like it affects theirs. But I mean, they're worried about theirs. We're looking at it like in how it affects our economy. And then people in Germany are looking at like, it's so interesting, like how everyone's like economic
It's all
situation affects each
interconnected.
other. It's so
Yeah,
interconnected. Yeah.
it's all interconnected, and there's a bit of a saying: higher yields in one country lead to higher yields everywhere. We've seen that with Great Britain. We've seen that
Mm,
with Japan. Like, because again, if you get a higher yield in Japan, if yields start to move higher for whatever reason, right? Fundamental reason, maybe a good reason, you get higher yields in Japan. Well, Japan's a current account surplus country, meaning they've accumulated huge amount of national savings. And again, whether that's a private individual or a firm, eventually there's a yield in Japan where that money goes, you know what? I've been in US treasuries, but I bought them at, I don't know, the 10-year was at 2%. Now I can get 2.5% here in Japan. I'm going to sell the US treasury, right? Putting downward pressure on the bond price, upward pressure on the rate, to then go to, buy the Japanese bond that I'm looking at. So yeah, higher yields in one country can lead to higher yields everywhere. This is part of why Scott Bessent was so adamant about getting the Bank of Japan to hike their interest rate was because he's a former macro guy. Like, he
Yeah.
understands that repatriation dynamic. He understands the yen carry trade, right? All those sort of more mechanical sort of things that a academic might not understand. The Fed is filled, and the Treasury is filled with all these kind of useless PhD academic sort of types that don't understand how markets actually work. Besant comes from studying under arguably the best macro practitioner, Soros, whatever, his politics aside, he would, he studied under arguably one of the greats when it comes to kind of macro
Mm,
trading. So yeah, he understands, what he was trying to get was Bank of Japan to hike rates to control the long end. Because again, part of the reason the long end is going vertical is because inflation is 3% and
yeah.
their overnight interest rate is half of 1%. So yeah, you get,
Mm,
if you're in the bond market in Japan, inflation is 3%. Why is the 10-year? So if you buy the 10-year JGB at 1.8, you're guaranteed to lose money. And not only that, but you have signaling from this new prime minister, oh yeah, inflation is 3% now, but I'm going to blow out the deficit. I'm going back to QE and yield curve control and easy monetary policy with the Bank of Japan. It's much more linked over there. The independence that we have here is much less over there. If you're sitting in JGBs at 1.8, looking at inflation at 3%, guaranteed loss of your money, and an expectation that you're going to get even more dovish monetary policy, even more dovish fiscal policy, you're going to demand a higher interest rate. And so we see, long end rates moving higher. If the Bank of
mm,
Japan came out and said, look, like inflation's at 3, new prime minister, be damned, doesn't matter what you want. We are going to break the back of inflation. We are going to, Paul Volcker our way out of this situation that we find her. Arguably, it's not a bad situation that Japan's in my opinion. But if they came out and did that, you would see the long end rates start to stabilize. And that was what Besant was trying to get after, because he realized that if Japanese interest rates kept moving higher, eventually it would lead to higher interest rates in America, or at least marginal pressure to the upside with US rates. And so that was part of what he was trying to avert.
yeah. I've seen a lot of people. Well, I guess it's like kind of split actually on Besant. I've heard some people say the guy's an absolute idiot, and I look at him, I'm like, he doesn't sound too much like an idiot, but also like he it feels like an impossible task he's got on his shoulders. I mean, I don't know how he's balancing all these. It feels
Look,
Game of Thronesy.
yeah, um, he's not an idiot, but he unfortunately is kind of falling victim to, like you mentioned, kind of an impossible task, which is steering the US economy through the current situation that we find ourselves in, number one. And number two, the impossible situation of being the Treasury Secretary under someone like President Trump. Uh, you know, he, yeah, it's unfortunate. I kind of had higher hopes for him. So I'm a bit, disappointed sometimes
Mm,
to hear him say some of the stuff that he says, because in the beginning it was like so refreshing. He was saying all the
yeah,
right things.
I remember.
But yeah, no, he works for Trump.
It's
It
true.
is what it is. It's a political position, and yeah, I think the key with Besant, I don't think will be true with Hassett as the Fed chair, but the key with Besant, in my opinion, is to kind of like try to separate out the stuff where it's just BS political. Like, you can tell he's just forced to say that because Trump said it 2 days prior,
Yeah,
right? Sift that out,
yeah,
separate that out. I think is probably the best way to approach it. But yeah, he's kind of he's got an impossible task. The US economy right now is not in great shape. In aggregate, it's in great shape. But if you're part of the bottom 80%, you're struggling pretty bad.
yeah, yeah. No, definitely. I see some of the people in the chat. I see Sammy's down there in the chat. What's going on, Sammy? Good to see you, brother. One thing I wanted to pull up here, Robert, was because it came up. It was someone had posted. I don't know who this girl is, but I couldn't find the tweet. But it was someone who was tweeting about BMNR and MSTR. She's just not happy with the price action. So, anyways, I looked at it and I was like, oh my god, dude, MSTR is down
What's BMN?
bad.
What's
BMNR is
the,
also not looking good right now.
what is
BMNR is
that? I don't
Bitmine.
know that
That's
one.
that is Tom Lee, the one that's buying Ethereum.
Oh,
Dude,
yeah.
that one's also looking pretty rough. And so, anyways, she's like super not happy with how both of these are performing. She's not a fan of like the Treasury's idea. So she's just like this. It's this girl. I don't know if you've seen her. She's just like every day. She's constantly fun on MSTR, and it's been pretty crazy. Like we've seen like a pretty big. I don't know what you call it. Like,
Oof.
I don't know what you would call it. Just like just not good press, I guess you could say. But then Saylor comes out today and says, "Hey, we're building up a cash reserve. We got to be able to pay off these dividends. We're good for the next few years. We've got $1.5 billion in cash now. We got 55 billion in Bitcoin. We're good." Is kind of like where he's at. I don't know, dude. The longer this game goes on, I'm starting to think. I'm not sure. I mean, if he outruns Bitcoin's price action whenever it's faulting, and he's able to kind of just push it off as long as possible, yeah, if Bitcoin ends up hitting the price targets he has got in the next few years, he's going to become the richest, most successful guy ever on the biggest bet ever. But I don't know, dude. I mean, maybe it's just because the market's not up only, and I don't know. What are your thoughts on all this?
Yeah, I mean, I've been pretty, I don't want to say bearish, but I've been skeptical of any treasury approach. And I understand that's in vogue now. I've been
Yeah,
skeptical since last November. There's just something about it that feels a little not good to me. And I don't have to invest in it, right?
sure.
And so yeah, I just kind of have been listening to that kind of inner voice, which I would highly recommend for those that are trying to navigate markets. Listen to your intuition with things. Just trust me, like generally your intuition will be correct. And so yeah, I not saying it's a scam. I'm not saying it can't go higher. I actually
Sure.
think that it's probably setting up for a good long right around here, kind of high 170s, 180s was kind of my range that I was kind of watching. So I'm still kicking it around, but I might be going long. I've been bearish since kind of November when it was going parabolic like that. That was when I really kind of started to, be outspoken about my bearishness
Yep.
towards it, or skepticism, or whatever you want to call it. But I think here, I'm starting to get bullish, and again, I'm far from a irresponsibly long MSTR guy. I'm far from that. I'm starting to get bullish. So yeah, I
Wow.
think that there's MNAV like below 1, and there's some value to Sailor. There's some value to MSTR as a company and what they're doing in the financial engineering. There is some premium, and my argument has always been that there is some extra value to whatever Bitcoin they hold. There's some amount of premium that is should be baked in. The question is what premium, right? MNAV a 3? I don't really think so. What's the ticker? Naka?
Yep. Nako. It was
Was this the
Nakamoto.
one that was this the one that was up at a MNAV of like 12? Or was that Dylan's one? I get it mixed up. There's Kindly,
Metaplanet.
Naka, Metaplanet. Yeah.
Yeah.
What is it?
MNT
TLF.
MTPLF.
Yeah. Yeah, like this one was
Yeah.
trading at an MNAV of like 12 or
Yeah.
14 or something. It's like, what? People were buying it too, and people were doing crazy stuff in order to buy it. Like I remember seeing posts and stuff of people that were doing really irresponsible things to buy in this kind of when it was doing that parabolic thing and gapping up every day. And if they had just bought Bitcoin, they'd be a lot better off. So yeah, I think the chart that I had before was MSTR divided by Bitcoin. So yeah, it's not really been outperforming Bitcoin, which is kind of what you want to see. So yeah.
Yeah, dude, the treasuries are an absolute mystery to me because I don't know. It's such a that is a derivative of a bet. But like everyone's doing it, but it's like fully contingent on like short to midterm price action. because like they don't have the ability to, like, unless you're Sailor, basically, you're not able to outlast everybody else. At least in my head, I mean, if you're a insert any other digital asset or crypto and you're stacking and it's not Bitcoin, so you've got that crazy volatility. Bitcoin's got crazy volatility, but nothing compared to these altcoins that can move because their market caps are so small. And if it goes the opposite direction against you and it doesn't start to trend back quick, it's like, what are your options there? Like, you can buy the dip, but if it keeps going down and you got a year down or like months of down, it's like, I don't know how you're supposed to keep your shareholders interested. I don't know how you're supposed to reward your shareholders.
Yeah, well, it's all like a hype. Part of the reason I felt so much kind of skepticism was like it was all like a hype game. It was all very meme stock, reminiscent of the meme stock era where, look, it like the attention economy, as some people call it, right? Is very much like that sort of vibe, and I don't like that. I'm not looking to put my money in something that demands the greater fool theory, right? And constant attention and constant growing enthusiasm and euphoria just to pump the price. Like, I'm not looking to put my money there, right? In something like that. So yeah, there was very much of that sort of like social phenomenon to it, right? Where it kind of demanded the irresponsibly long sort of folks in order to justify a higher premium. You needed to have, I mean, I, I don't want to say things that are, unkind, but like you needed people to buy at a premium to what
Mm,
it was actually worth. Like, if someone's willing to buy Bitcoin at 2 times what it would cost them to buy it themselves, um, maybe if someone's willing to pay 3 times, yeah, the person that paid 2 times will make money. But you're constantly expecting people to pay more than the thing is actually worth. And, yeah, Metaplanet got up to 12 MNAV. So if you got in at a 2 MNAV, right, and wrote it up to a 12 MNAV, you're genius. Great trade, right?
yeah,
But like otherwise, you're kind of hoping on this greater fool theory where you buy at a 1.8 times premium and you're hoping someone buys a 1.9 and then another
yeah.
person buys it at 2. So you know what I mean? You kind of like need that. And I personally, that just kind of makes me feel a little weird.
It reminds me, like, when I was when we were first doing this Bitcoin spaces and people would bring up the altcoins and they were like, look, you can do what you want, but like, it's a trading game at that point. They're like, I mean, the idea of buying Bitcoin because it's a hard asset, it's a different conversation. Essentially, it's fine to do it. It's just a different conversation. It's a different reason to stack, probably a different investing thesis overall. Um, and so I don't know. Yeah, I want to bring that up, but I thought this was silver at first. I got excited, but then I saw it was Solana,
Solana.
and I wasn't
Yeah,
nearly as excited. But
I
I was gonna
haven't looked
say
at
silver might
these.
be something we should poke into, but yeah, let me
Yeah,
know. Are there
silver.
any of these that you're interested in? Any of these altcoins?
No,
No.
altcoins not really. I mean, look, like that looks like a massive Head and Shoulders, like
Mm,
a what 2-year Head and Shoulder pattern on Solana. If
dope.
it broke 120, oof, that would probably be pretty ugly for Solana. Yeah, I don't know. They just don't look. I don't know. I don't look at them that often, but I just look through XRP, Ethereum, Solana, and look, yeah, maybe like I don't know. Ethereum is kind of a weird looking chart in my opinion.
Yeah.
XRP, ugh, God, I don't know. They just look all sketch. There's probably a huge air pocket here. I would imagine somewhere in the kind of like 1 to 130 range on XRP. I'd be worried about that. Solana does not look that great. I mean, maybe it's a good long. Personally, it's just not something. None of them look like super interesting as a trade. And I just can't get behind kind of like the underlying the underlying like what are you actually buying? So
Hmm. Yeah, totally.
but silver I could get behind. The problem
Yeah,
is
yeah. Tell me about this a little
it's
bit.
going parabolic. So yeah, and I was checking the spot relative to futures earlier, but we can take a look at this is silver spot. So do the daily. Yeah, it's trading at like a 50-cent premium. to spot. We saw like huge backwardation earlier a couple months ago, where spot was blowing out above the futures price, which is very uncommon, and it was to a large degree too. It was like $2, I think, at the peak, maybe even higher, $2 above the futures price, which is very, very uncommon for silver. But yeah, it's just for me it's breaking out of a cup and handle here, cup and then handle. It's breaking out of that, but then it gets arguably even more bullish when you look at a super long time frame, which is cup, handle, right? So you have like what is that? A 50-year cup and handle, right? And then
a
you have
50-year cup and handle.
and then you have a smaller cup and handle here
Oh wow, look at
on the
that.
daily, like a 2-month cup and handle. So I don't know. It could very well keep going. I was buying silver back 2022, 2023, like back in this range.
Damn,
So
very nice.
yeah.
Yeah, I know a lot of people are saying, silver's trying to
I
tell
didn't
us
buy
something.
enough,
Dark side
but
is tweeting. Actually, there was a tweet. I gotta see if I can find it. It was this guy named Bark Meta, I think. Let me pull this up really fast. Let me see if it's sharing the screen now. Let me switch over. So do you know this guy? This guy came from like degen land, but he's also like a smart dude. But I can't ever tell if he's like farming or if he's just like shit posting. It's like one of these dog guys, right? So like it's hard to take the guy seriously because of all the dog things. So he started buying nickels, and this tweet went viral. This is not sponsored, but here's the tweet. Here's the tweet. 4.5 million views. Okay, he says I sold all my Bitcoin. I put it all into physical nickels. You read that right. Here's the math. A nickel is worth 5 cents, legal tender, but the metal inside, copper nickel, is worth 6.2. I'm buying money at a 20% plus discount. If copper price crashes, he's still got the 5 cents. If copper goes up, he has a fortune. He said the downside is 0. And there was like a bunch of like actual discussion going on in here. I don't know. I just remember seeing this and being like, I'm going to ask Robert about this in a couple days.
Yeah, no.
What are your thoughts?
I have a mutual that also did that, bought a huge amount of nickels.
Really?
So yeah. I mean, I personally, I understand that this is heresy, but personally, there's something about physical metal, physical commodities that I personally find a lot of value in, whether it be nickel, copper, whether it be silver, gold. There's something about being able to hold it in your hand, and it's in demand for real purpose. Whether it's copper is in demand, obviously, for a lot more kind of industrial use. Silver has about 50% of the demand comes from industrial use. So yeah, the purpose of the demand is different. The application, the industrial application, is different. Copper or silver, but the fact is, it's needed for actual real things. It's a commodity that is relatively scarce. The problem with kind of physical commodities like the metals is that higher prices can encourage more supply to come online, at least from a mining sort of perspective, right? If gold goes to $10,000 per ounce, a lot more people are going to be mining for gold. Well, what happens? Eventually, people find more gold, the supply goes up, and you get a lower price. So that's one cool thing about Bitcoin. Now, Bitcoin you can't really hold in your hand, which some might say is a good thing. But yeah, but Bitcoin doesn't have that property where higher prices, Bitcoin mining is Bitcoin mining, difficulty adjustment and all that. So that is one pro that Bitcoin has, is that higher prices. Yeah, it could, you and I that bought Bitcoin back, whatever, it could encourage us to come and sell our Bitcoin, but you can't find any extra new Bitcoin like you could with gold or silver.
Right.
But yeah, the math, I did see that post, and then I also saw the post from the mutual guy that did the same thing. And yeah, it's something I would do. I'll say that. I didn't, but something I would do if I had thought of it.
I saw this and I was like, there's no way this is real. But then I was like, this feels like a really like safe bet actually, because you're right. Like I started carrying cash. I'm just hoping I don't get robbed. I've said this a couple times on Spaces now, but I started carrying cash just almost like an experiment, and I like it. I don't know. I enjoy having the cash on me. It's like I don't know. I don't know what it is. I can't explain it. Like I haven't had cash in so long, and then to be able to have cash, there's something about holding it and being like, dude, this is like watching. We were talking about watches a couple weeks ago. Like there's something about the physicals that like it's just kind of nice.
Yeah.
I don't know. Like it's kind of nice. It's so strange because it's like going back to board games or something. It feels like, but it's I don't know.
Analog life. I think that records are way better than digital files, and I stand by that. I have my tube receiver from the 70s that has those weird power tube things. I think it sounds a lot better. When it comes to guitars, right? Like I think tube amps sound way better than the modeling amps, or although those are getting better, the digital ones. So yeah, like I just kind of like. I'm a bit of an analog guy. I think physical things are good. I don't really like physical cash as much as I like silver and gold that I can hold in my hand. But yeah, no, I think that we're increasingly living in a digital world, which is okay. It is what it is. It's probably not going to change. That trend is probably going to continue. But from what I've noticed of at least people my age, kind of like the younger millennials, there's a bit of a kind of resurgence of like analog life and kind of the old way of doing things. And I kind of feel that vibe. I pick up on that vibe that people are getting back into, a bit more, not retro, but, analog, I think is probably the best way to put it. Physical.
Yeah. Yeah. I don't know, dude. The tangible, that's a good word, tangible, he said as well. And
Tangible,
Ryan here said line draws give you the alpha on levels, then up to you to combine that with fundamentals, narrative. Nothing wrong with high time frame, bull bag, a lower time frame. Yeah. Agreed.
Yeah. Like personally, the way that I approach things, like whether it be like the yen, I've gone long on the yen twice. Both times I nailed it. One was like a 500% trade, YCL options. So there's a ETF that tracks the yen. One time was like 500% on some options on YCL, and the other time was like 150%. Yeah, I combined a bit of like kind of TA and what the price action was telling me with some of the fundamentals kind of in macro world when it came to monetary policy with Japan. And I don't think there's anything wrong with combining different schools of thought, right? You can have a fundamental view on something, and once that starts to line up with kind of what the price action is telling you, it can be, that's generally kind of how I go about things. Like, same thing goes for Bitcoin, right? I have kind of a long-term fundamental view on it. And when we got that capitulation wick here that morning, right here, I bought because RSI on the daily got oversold and it looked kind of waterfall-y, that capitulation sort of price action. And so I bought at 82.8, and then it went back and tested it again. I was like, okay, I'll buy more at 82.8. So I bought more. And yeah, I've been kind of watching it, hoping it'll get back down to kind of the low 80s. I'm secretly hoping that we see more downside. Like I'm one of those people. It is what it is. Like, I want cheaper Bitcoin. I hope that it goes and kind of tests this like VRVP volume shelf here at 70. Cause yeah, I'm like 40-ish% cash right now. And so I would buy, I'd be buying a lot at 70.
Yeah, here you go. I'm down for either one. If we end up going up, I guess I'll get rich with the amount of Bitcoin that I got. If we end up going down, I'll just have more chances. I mean, I don't know why there's so much. I mean, I guess I know why there's so much like anger and annoyance when the price goes down.
Look,
it sort of goes against like what everything Bitcoin is. So obviously the solution kind of thing. But it's like, dude, it's a price action. This always has been how it is,
Yeah, look at this. So hopefully people know ARK, ARKK.
Kathy Wood.
Yeah. So like it peaked at the exact moment that Bitcoin peaked here back early October. Bitcoin, whether we like it or not, trades as kind of a high beta tech stock. And so, high beta is going to underperform in certain periods of time. And we're in one of those periods of time. So beta is not doing well. In fact, that beta is hurting you. And so, yeah, like ARKK, Bitcoin, I think this tells you, like, just chill out. It's okay. ARKK hasn't declined nearly as much as Bitcoin. I think I measured it and it was down less. But the point being, kind of early October, that was when ARKK topped and started to decline. So it's just it's just a pullback. I'm not personally super upset about it. And I like the chance to be able to accumulate more at 70, 80, whatever it ends up going to. I'm sure if we plug in PLTR, it'll be similar story. Yeah.
I'd be curious to
It's a couple
or
day
actually
gap,
after we
but
look at this. Yeah, yeah. Is so like this is kind of like a random question, not really related to the charts so much, but with Tom Lee like going on TV, it feels like every other day as the price goes down. I mean, he honestly goes up. If the price is up or down, I think they just like having him on. He does well on the timeline at the very least. But if say everything goes the opposite direction, as a lot of the Tom Lees, a lot of the guys thinking 2026 is going to be great. Do like trying to think. I mean, in my head, I'm like, okay, so if you're wrong consistently and you get everything wrong, they're not going to bring you back. But then I'm like, but these guys have been around forever. Like they've been on Wall Street for a long time. You're expected to not be right every time. That's like you're never gonna be right every time. But like if this all this stuff happens, or even Michael Saylor, like these things happen and then it ends up not working out, kind of thing. Do they just turn it into a new thing? They make it like would he make another BM&R but like different? And then people will just throw money at that. Like, I don't even know how these things work because I haven't been paying attention to these macro guys. Like, I know you're watching a lot of these, and I am now paying attention to them, but I wasn't prior in like past cycles and stuff. Like, is it typically the same?
I lost you. I'm not sure.
All right, I see my face now.
There. Yeah, I lost you for a second.
Gone. All right. I think we're back. My internet, I think, just had like an aneurysm.
Yeah.
Let me know if you can hear me now.
Yeah. Now I can. Can't hear me?
Okay, cool. Yeah. So yeah, I guess in my head I was like, yes, I can. Hopefully you can hear me. If not, we may have to.
Yeah, I can hear. Yeah.
Okay, perfect.
But I think there's like a lag.
But yeah, like there might be. All right, so we'll finish off with this then. So like, do you think, say these guys are wrong, just for like just for fun, say they're all wrong, in the next year when their markets are swinging back up, kind of thing, do they go back and is it Tom Lee again? Is it Kathy Wood again? It's like all these people again, or does the main focus turn to like new faces in the industry? Like I don't remember Tom Lee from the past cycle, I guess, but like at the same time, I'm thinking he probably was around. I just wasn't looking. Like, how do these things happen?
I don't know cycle wise, but what I've noticed is, I don't know how to say this nicely. There have been people in the macro world that have been calling for a recession for 4 years, maybe even 5 years. And they keep getting invited back on the big macro shows. It's like, look, I might be a nobody, I might be a nerd, but like, I haven't been wrong for 5 years. In fact, I've actually pretty much been spot on. I don't have letters after my name. I don't have a crazy reputation or history or whatever, but they keep getting invited back on, even though they've been dead wrong for 4, 5 years. It's something I've noticed. It is what it is. So I don't think they care. It's like they just keep doubling down, calling for home prices to crash or recession or all this stuff. And it's like they've been dead wrong and they keep getting invited back.
Yeah, I think it's a media game because it's like if their clip did well, then they're like, like doesn't really matter if they were right or wrong. It's kind of like with we were talking about sports betting the other day.
And people like doom. They like, stocks are gonna crash 80%. Right. Home prices are another 2008 is coming. Like people, from an engagement standpoint, that does well. So
that makes sense. Yeah. My other theory is that these guys are getting on TV via some strange means. Either they're paying or there's some deal going on behind the scenes. Because
probably.
I see some guys on TV and I'm like, look, I don't know much, but I know you're an idiot. And I just know that. I'm just like, I don't get it.
With the YouTube, I don't know so much TV, but I do know with YouTube and some of the bigger shows, like there are agreements and there's business, and they're not just getting invited on because they're a great macro analyst. There's other things going on.
Yeah, absolutely. Because guys, I get it with some people. Like, I mean, we do a lot of business. Like, I get it. You get appearances on certain shows. You need to get on somehow. Like, I totally get that side. But there are people who like reoccurring every year and position as like a serious expert, where I'm like, okay, this is not the same as like a clearly sponsored segment where it's like a 2-minute little, exchange sort of thing where you're like, okay, this is obviously a commercial essentially, versus like someone really getting like an actual 15-minute segment and talking about these things. And I don't know, I'm not sure what to think, I guess. I'm glad that I'm here, and I'm glad I got people like you, Robert, who have been around and you've seen the things a little bit, so I can ask these things, because I don't even know the answers. I see Ryan in the chat. I see Andrew in the chat as well. I appreciate you guys coming through and being active in the chat as well.
Yeah, 2022. Yeah, and we had a bear market too.
Damn, true. How about the people now? How about the people now on X? Like, are any of those, I mean, you don't have to call it names, but like, are there people in our circles that were definitely around saying the same thing that were totally wrong?
No, not really our circles. More macro, serious macro people that have been dead wrong for half a decade.
I'm interested. I'm excited. This will be my first time because I've now gone through the full cycle, but I have yet to be fully aware of what's going on. So I'm saying cycle as if it's guaranteed. I don't know, but if we end up seeing a cycle and Bitcoin ends up, kind of sucking for a year, if that ends up happening, it'll be the first time that I've been. I hope so as well. Selfishly, I hope so because I don't have enough Bitcoin. But if we do happen like that, it'll be the first time I get to see behavior at the bottom, but like really paying attention. Like I was paying attention, but the only thing I was paying attention to was the fact that I was too broke to buy anything, and so I didn't really pay attention. I was just paying attention to like the cartoon monkey picture guys all yelling about, when's the next NFT season coming back. And so I wasn't really locked in like that. And so, yeah, man, I'm happy to be here. I'd be alive. And is there anything else you wanted to take a look at on the stream?
No, I would keep an eye on Japan, keep an eye on repo market. Some of the repo market stress could be month end. So yeah, there's the possibility that it starts to calm down again. But I think the general trend is really kind of the signal with these issues in the repo market, which is that moving average. And it's been going straight up and to the right, the yellow line here. So that moving average helps to kind of clear through some of the kind of day-to-day volatility. Funding stress, liquidity strain the pressure is building. Like, I think undeniably looking at this moving average, and from, again, the former SOMA manager, the Fed chair himself, New York Fed, current SOMA manager, like the governor in charge of financial stability, right? Like they're all talking. They are all worried about this. So, maybe pay attention to that.
Yeah, definitely. Last thing I want to pull up here, and hopefully we can hear the audio. But I love playing these clips just while we're on stream because I just think they're interesting. It's like my own version of like Fox Business where you like play a clip in like reaction. But it's Tom Lee. Let me see if I can pull it up here. I just think Tom Lee's a fascinating character. Like I've never seen someone with this amount of pull. Like no matter what he does or says, people watch. And here I am pulling him up on a stream because like I can't help it because I want to get your thoughts on it. I'm not sponsored by Tom Lee. I just think it's fascinating. But it feels like at least he's one of the final bulls standing who is just like sticking to his guns, does not care. He's stuck with the same thesis. He hasn't budged. And if he's right, I mean, hats off to him. We'll see. I'm totally for it if he's right. Okay, I unmuted. Hopefully we can hear. If you can't, just let me know.
I do think Bitcoin can make an all-time high by the end of January. So I don't think we should think the highs are in place for Bitcoin or Ethereum or crypto. So a lot of it's going to depend on equities recovering, which we expect it to, and that helps the animal spirits. And I think a new Fed chair will help. And we have, as Becky said, when people got worried about a hawkish Fed, that kind of hurts the discount models the discounted cash flow models like AI models, but it hurts crypto models too. So if we have a dovish Fed, that's really a tailwind. I do think Bitcoin can.
Yeah, honestly, he didn't say as much as I thought he did when I watched it earlier. I think we actually flushed it out enough on this stream.
I don't know about January, but yeah, I would say that he's on to something. I mean, look, you get someone like Kevin Hassett in there, who takes interest rates to zero and does all sorts of kind of nonsense like emerging market sort of stuff. Bitcoin will go up.
Yeah.
So.
Andrew says all-time high by January is crazy work. Maybe.
Yeah.
It's tough. It's hard to see that. It's hard to see. The deeper it gets, the worse it's looking. I'll be honest.
Yeah, I mean, we got 2 months, right? Yeah. Basically 60 days. It's possible. I would just say it's probably not probable, if I had to say.
Yeah. Well, dude, anyways, I appreciate you, man, as always. For everyone who's watching in the stream as well, be sure to give Robert a follow. His X handle is tagged right above our stream or right above our faces. If you like the stuff we were talking about, he goes way in depth on his YouTube as well as his X. And he's pretty active on both. And so I highly recommend you guys check him out and give him some love over there on X and YouTube. Subscribe. And yeah, we do these streams all the time, every week, or we try to at least. And with the spaces as well, we try and come on multiple times a week. And so if you enjoy these conversations, like there are plenty of them. Robert's in all sorts of them. There's morning shows he sometimes goes on. There's afternoon shows. I've never really seen you on those late night shows, Robert.
Yeah,
you probably know well enough to stay away from them. Oh, he goes
to bed early. Yeah,
that's true. That's probably the right way to do it. But yeah, man, I appreciate you and everybody here in the chat. If you guys haven't already, please do repost the stream. And again, if you guys want to start trading, definitely check out our partners over at Ossium. I linked a link down below if you guys want to check out that trading platform. It's self-custody. You don't have to worry about them taking your money or having an October 10th situation. They're good people. It's a great platform. You can trade spot, leverage. You can do all the things. You can trade MSTR. You can short BMNR if that's your game. You can do whatever you want. And yeah, man, we'll see you guys all in the next one. We got another space tomorrow at 11 a.m. Eastern with the traders. And we've got a more macro long-term focus space at 3 p.m. Eastern tomorrow. So we'll see you guys there for that one. And yeah, Robert, any final thoughts before we sign off?
No, I'm still bullish Bitcoin, and I hope it goes lower because that's remember when Bitcoin price is going up, your wage is getting devalued, right? So just remember it that way. Really force yourself to kind of put in those terms. Your wages in dollar terms are getting devalued every time Bitcoin goes up. So once you really internalize that, you start to actually want Bitcoin to go lower. So especially if you have a long-term fundamental view, which is important, I would say.
Dude, that's like kind of profound. Your wages go. Yeah. Okay, I will take that with me. That's a good one to keep.
The same thing with gold going up, right? Your dollar weight, your $100, whatever it is, gets you less actual physical gold. It's the same thing with Bitcoin.
It's like when Trump said, like, I will keep the stock market at all-time highs or something along those lines. I was like, wow, there are losers in that scenario too.
Same thing with the stock market, right? Like you take the average hours of work to buy one share of the S&P 500. Your wages are getting devalued relative to the stock market. It used to take 20 hours of work back in the 60s, back during the boom era. It took 20 hours of average work, 20 to 25, to get one share of the S&P 500. Today, it takes 200. So when you put it in those terms, 20 hours or 25 hours versus 210 hours for the same thing, right? One share of the S&P 500. So,
well, everyone, dang, make more money, raise your income somehow, stack assets, invest in yourself. There's not really a way out other than you just have to go hard.
And don't have bad debt. Don't have unproductive debt. Try to get rid of that.
What would be the most unproductive debt? And then what would be an example of something that's slightly productive, I guess?
Credit card debt, probably, because you're at interest. Like a 30% interest rate.
Yeah, definitely.
And generally people are using credit cards for things they don't actually need.
That is fair. And I've definitely been a culprit of that.
Me too.
Yeah.
I got rid of all that, basically all my debt, and it feels really good.
Oh yeah. Yeah, 100%, dude. 100%. Listen, everybody, have an amazing rest of your day. We don't see you again.